Okay, y'all bear with me. Bear with me. Let me get the let me get this all together real quick. See how we can S&P. And now let me change this too, because this shit can get off here. Let me see. All right, y'all. Can y'all hear me? Let me make sure she can get in. All right, y'all. Do me a favor and tap the screen. I thought this was a register only live stream. I'm not sure if you guys registered or not to join. But today we will be talking about how to read a stock chart. I'll make it as simple as possible. If you guys can give me a second, I gotta go get my water and stuff together. But yeah, we've been in a bull run, one hell of a bull run. Okay, so if you can see all these spots that are circled on the bottom of this white line are showing you the last four times that the market dipped pretty hard. Okay, and you can see that we are literally recovering in the same way that we did back in 2020. This is COVID 2.0. So the question is it about to reverse from here, or does it have more room to go up? It wants to reverse because I didn't draw a top trend line here to show you that we are literally on the top line. We are on the line of resistance. Okay. We are at the ceiling when it comes to being in a bull run. We are at the top. We don't know how much further we can go before it gets exhausted and comes back down. The reason this matters is because the S&P, that stands for Standard and Poor's. The 500 stands for the 500 best performing companies in the United States in the stock market. So the Standard and Poor's is just two dudes that built the company, right? They built it back in the day. So the S&P 500, this ETF, it tracks the entire market damn near. So you don't have to wonder, how is the market doing? You can just check this and it'll give you like a radar of how the whole market is doing in totality. You can also invest in the whole market at one time by buying this ETF. Okay. Now let me go ahead and get this set up real quick. I was actually on the way to my computer, was driving back home, you guys. I saw it was 8:45 and I'm like, I really need to make sure that I get on live on time before they cancel my whole event that I had planned for a week. But yeah, I was on the way home. Got into a bit of a great debate. All right. So what you want to pay attention to is where we are now. Can y'all hear me good? I'm about to pull up Webull. I'm about to pull up my Webull chart. We get a good idea of where we at now. Yes. Okay. Cool. All right. How y'all doing? How y'all doing? What y'all got planned for this week in the stock market? You guys got a stock that you keeping your eyes on that you would like to go over before I get into this? Let me pull up Webull. First of all, I want to thank y'all for joining. I appreciate the support. I'm looking forward to teaching y'all some shit today. Make sure y'all retain a lot of this information you're about to learn. Yeah, I want to take my headphones out. All right, I hope y'all still can hear me. Hold on. I'm gonna do it like this. Let me cut the green screen off. Boom. Here we go. All right. Some of y'all trading from y'all cell phones. All right. Some of y'all trade from y'all cell phones. So it won't look like this. It will not look like this. I will make tutorial videos on how to do it on Robinhood, how to do it on Webull, so you know how to do it on the phone too, versus the desktop version, because they also have one for Robinhood too. I don't know if y'all saw the new website for Robinhood. Let's see if I can pull that up too, just real quick to show you that Robinhood has upped their game. Robinhood legend, they done upped their game. See? So now Robinhood looks like this. This is how Robinhood look. Both of them are equally as complicated if you don't know what the fuck you looking at, right? So I'm gonna start with Webull because this is my favorite. We'll go to Robinhood. After I go to Webull, I'll show you some things. So over here on the left side, you got the watch list. Okay, your watch list, which is a list full of stocks that you can keep track of. You don't even have to search for them. You add them to your watch list and they'll be right here on your watch list. That's why every time y'all hear me talk about a stock, I'll tell you, add it to your watch list so you can keep an eye on it. Now, what you want to do is add stocks that you might not want to buy it right now. You just want to keep an eye on it. It's self-explanatory. You want to add it to your watch list, your list of stocks to watch. You can go here and see the ones, the top 10 gainers and losers, top options. You can go here and see all stocks. But I have different watch lists that I name different things. So I can see, you can categorize your watch list. All right. Now, you know that this is all over here, your watch list. Let's go down the line and talk about each button. This heart is how you get to the watch list all together. Now, the whole screen is filled with the watch list. And I can do things like look at the stock, the full name of the stock, GoPro. I can see a little mini spark line, which is like a mini chart. I can see the last price that somebody was buying it under. I can see the last price somebody was selling it under. I can see, let's see, the events. They sell events on it. Will GoPro be above $2 or not? Will it be under $2? Those are events. The percentage change, the previous close, the previous open, the previous high, the previous low. I mean, right? The price was previously $4.15. It opened at $4.15. What else? We got GoPro opened at $2.05. And it made it all the way up to $2.15, and it was as low as $1.93. You can find all this information on the watch list page. Pre-market and after-market hours on the same stock. The volume, average volume, which is how many people are trading that stock, right? How many people have bought and sold shares of that stock? Pretty much how many people got open orders of that stock right now. And the percentage range, the turnover, 52-week high, 52-week low. This is how high it's been in the past year. This is how low it's been in the past year. It's on the NASDAQ exchange, $327 million market cap with a PE ratio of negative 2.9. You can find all of this information on Webull, okay? All of that information. Now, what I like to do is, let's say I'm looking at a stock. Let's look at GoPro. Now, I'm looking at GoPro. Up here, you have options that you can click on the top row. You can go to options and see all of the options that you can pick, right? This is for the swing traders and the day traders that trade stock options. You might not want to buy GoPro outright. You might just want to predict where the price is going, and that's when you deal with stock options. Stock options is, no, let me send the live out to a few more people, y'all. I apologize. 1 second. More people that were supposed to be here in attendance, and they are not here. All right. Yeah, y'all do me a favor and share the live out. Let me see. Y'all might not even be able to while I'm asking y'all to do that. Okay, I sent it out to a few people. That'll be good. That'll be all right. All right. So if you want to buy stock options, you don't want to buy the stock GoPro outright because it's $2.70 a share. When you trade in options and you're on Webull and you went up here, you got this. This is sort of like an options chain. That's what it's called, like an options chain. These dates are expiration dates. Okay. When you pick what price you think the stock is about to go to, you have to pick the expiration date too. You can't say, okay, I think GoPro is going to go to $3. You have to say, when do you think it's going to go to $3? And you really need to pick an expiration date that's a little bit past when you think it's going to happen. If you think that it'll be $3 by September 26th, then I really would like for you to buy the October 3rd contract. That way you have time, y'all, because the stock market is not about time in the market. It's about time in the market. OK, so I will click here. And now I have all the strike prices that I think it's going to go to. Remember, I said I think it's going to go to $3, right? So if GoPro is trading at $2.07, and I think it's going to go to $3, I would look for the $3 strike price. And it is right here. But they giving me $3.50. Also, what you want to pay attention to is the spread. So because it's going from $2 to $2.50 to $3.50, right? I want more strike prices. If you want more strike prices, you simply go all the way up over here and you change this right here, strikes. Usually when you run the mouse across something, it'll tell you exactly what it is. You don't have to be it doesn't have to be complicated if you read. So I'll go here, I click strikes, and I'll go all the way to, I want to see, let's just say 20 strikes. So now it's giving me more prices to choose from. It's giving me more prices to choose from. I can literally say, okay, let me see. Let me close the other contract real quick. All right. Let me see. I'll change this to right here. You see where it says calls and you see where it says puts. If you think the price going up, you would buy from this side. If you think the price going down, you would buy from this side. Whenever you buy in a call, right? Anything above the share price, whenever you buy in a call, okay, is out of the money. So if you think the price going to $3, that's above the share price. If you think the price going to $4, that's above the share price. Those are out of the money calls. These are all out of the money. You hear me? The ones that are below the share price when you are buying a call are in the money. Now, when it comes to puts, it's a little different. Whenever you buying puts, and this is the share price, everything under that share price is in the money. And everything above the share price is out of the money. It's the complete opposite of a call. I'm going to say that again because a lot of people get confused on the in the money or out of the money. On Webull, they have these little initials with the arrow pointing up to let you know this is in the money. This is pointing down to show you this is in the money. So for the calls, this is in the money. For the puts, this is in the money. You understand? Anything above the share price. Like if you say the price is about to go somewhere, it hasn't went yet. That's out of the money. If it has already passed that number, it's in the money. I hope y'all understand that so I can go to the next part. So look, I think that GoPro will go up to $3.50 by October. So I will come over here and get this contract over here. It says click on a contract to select it, and you can view more information about that contract by connecting other widgets. If you click on the bid or acts of the contract, right, a sell or buy order will be created into the order entry widget. So the order entry widget is going to pop up. I don't have one on here, but I can add one. You go up here to widgets and you add a widget. It's simple. You add a widget. You add an order widget. I can go to options. I can add the options widgets. Here go the options chain right here. I already got that on there. I don't want that. I want an order book. I want to add an order book on here, which is showing you the previous orders that people are getting in real time. You can use that information. So because why buy a call if nobody's buying the call? I don't think it might be a good idea. So paying attention to that information can help you out as well. But that's not the topic of today. I want to keep it very simple and let you understand like that you need to be able to look at the order that you enter. And you do so by having this order entry widget. Okay. It also said right here, a sell or buy order will be created into the order entry widget. So this is your order entry widget right here. Now, because the market is closed right now, I won't be able to enter into a live trade to actually show y'all what it'll look like. You see what I'm saying? Because the market is closed right now, they won't let you buy it. They won't let you buy it. The market is closed right now. So I just want to go over the basics. So now over here, we also have markets. You click on markets and it'll show you some information about the markets. It'll show you where all three are at right now as far as the NASDAQ, the S&P, and the Dow Jones. You can also come and see an entire map of the Forex, and you can see the indices. So I can go to the market overview page and get a bigger picture of how the market is doing. More decliners than advancers right now. Okay, that information also helps you determine to make it helps you make a better investment decision, just from knowing that everything is declining more than it is advancing right now. All right, so can y'all tell me in the comment section what you think you would do if everything was declining more than it was advancing? So much information you can see on Webull, it can become a bit overwhelming. You also have the news over here. Yes, Chosen. That's right. That's correct. So now you got the news over here, and you can click on some of this news and find out. So it'll tell you the date. It'll tell you the source. Okay. And you can make a decision based off the news. This area right here can make you money. You don't even have to learn how to read a chart just from paying attention to the news. It's called a news catalyst. Anything that happens in the news sometimes that's market related will move the market. It will move the market. It'll move whatever stock it's related to. I can almost guarantee that. Now you come over here, and this is my favorite part of Webull. It's the screener. This screener will allow you to narrow stocks down. You can narrow it down. There's so many stocks to choose from that you don't know what to invest in. I know a lot of y'all like, hey, what should I invest in next? This is how you find what to invest in. I go to filters, and I can add filters on just about, I can say, okay, I only want to see stocks that what to invest in. I go to filters, and I can add filters on just about, I can say, okay, I only want to see stocks that reach a certain market cap. They need to be, I only want to see the high market cap companies. I don't want to see anything that's less than 7 million market cap. So immediately they put me up here with the big boys. Immediately we got Tesla, Pfizer, Apple, anything that you see on a T with a T next to it, they already in $1 trillion market cap. These are called mega cap companies. Whenever it reaches $1 trillion, that is a mega cap company. All right. You got large cap companies when they reach over, let's say, I want to say anything over $1 billion is a large cap company. And then you got mid cap, and then you got small cap. Anything under 10 million is a small cap company. Some of these companies are small cap, but you have the chance to grow with them. You have the chance to invest in the company and grow with them. These companies weren't always 2 trillion, 1 trillion, $3 trillion companies. All right. So now I got that on there. I can add volume. I only want to see the high volume stocks with a lot of trading volume on them. That's all I want to see. I can add another filter to narrow this list down more. I can say only show me stocks that have the RSI oversold. I want to see stocks oversold. So I bring this down. I want to see stocks under 30. That means it's oversold. Under 30. I did my research to find out, you guys, how to use the RSI, how to use the indicators. What do they mean? What are they for? Okay. For tonight, we just learning how to read a stock chart, but here I am showing you how to use a screener. So there is nothing that fits this criteria until I make it a little bit more. So now we got 3 stocks that are oversold. 3 stocks that are oversold. They in the red. Now, I know that if I go here to Coca-Cola, I can click on Coca-Cola and I can go to the chart up here. Make sure you click on chart. If it looks like this, you just go over here and click on chart. It'll take you right here. Now, I know just by looking at Coca-Cola that I see that, what's this? Earlier this year, Make sure we on the right time frame. Always make sure you on the right time frame, because you don't know what time this is telling you. You see the dates, you know that this is around where we at now, because this says say September at the bottom, and you know that this is pretty much the beginning of the year, because there go December. So you just pay attention to the timeline. So I automatically know this is showing me out the gate. I'm looking at about 2 years of information. I don't want that much. I just want, let's go to year to date. YTD is year to date. Let's go there. And now we can see from January, right? We can see from January all the way to now. Okay. So Coke gapped up and it never got back down. It never came back down. If Coke comes back down, it'll refill this gap. I like to point out the gaps. If y'all don't know me, I like to point out the gaps because it gives me an idea of where the stock could come back down into. So I know that the stock could easily come back down into this. It's actually not far from it now. I'm going to go ahead and add the RSI indicator on here. I'll go to indicators. I'll go to RSI. And now it's on the bottom. So the way this works is whenever this blue line is over the top dotted line, it is overbought. It is considered overbought when it is over the 70 line. When it's over the 70 line, it's considered overbought. You will even see it highlighted in the little yellow area so you can see when it's over 70. We are on our way to be oversold. When it is below 30, it's oversold. So, according to my calculations, Coca-Cola will come down because I'm looking at it. It looked like it's going to go ahead and go below 30 here. It's already getting close to this. So all right, so look, this is how I would play this. I would take a horizontal line so I can clearly mark where support is right now. I know that this candlestick stopped right here. So pay attention to this level of support. It's an important level to pay attention to because the price stopped there before. The price also stopped there here. It stopped there, stopped there, and it also stopped here. So now we know that if the price come Monday, tomorrow, if the price does not break below, let me stretch this out. If the price does not break below $66.94, which it almost did, that's major, because last time it got to this level, we bounced off of it. Last time we got here, we went all the way up. So that's the name of the game, is to figure. When I find an oversold stock, I'm looking for it to be down so that I can take it back up. When I find an overbought stock, I mean, everybody's buying it and it's overbought and it's in the 70 like it was here. Okay, like it was here. And as soon as it's overbought, look what happened. Look what happened shortly after. It's a lot of money. Okay, now we here. I want to make an educated prediction and say that we are on our way back up to $70 on Coca-Cola. Now, I don't know any news that happened that will add to this, but that's called confluence. Let me pull that up for y'all because y'all may have never heard of confluence before, maybe not in this sense. I got to type with one hand, y'all, excuse me. All right. In stock trading, confluence occurs when multiple technical indicators, like I just showed y'all, the RSI, like let's say the RSI and the MACD and the chart pattern. So not only is the RSI telling you it's about to go up, the MACD telling you it's about to go up, and the candlesticks look like they losing volume and it's about to do a reversal. Excuse me, that's more than 1, 2, 3 things pointing towards it going in a certain direction. So you use indicators, patterns, or other analysis methods to align to signal the same market direction or potential reversal. Basically, it's like saying everything is pointing towards this going up right now. There's too many levels of confluence, thereby increasing the probability of a successful trade. Y'all hear me? Increasing the probability of a successful trade. Is that what y'all not here for, to learn how to successfully trade? Well, if there aren't levels of confluence, okay, which is basically more than one thing pointing towards that going in that direction, then you will not, okay, you will not increase the probability of a successful trade if you don't pay attention to confluence. And confluence is basically, once again, is when more than one thing is pointing towards this stock going in that direction. I'll add another indicator. Let's see. I'll add the MAC. Y'all know I like that MACD. Return of the MAC. All right, now the MACD right here, boom. Whenever this line drops below this zero line, it is bearish, like it did here. And whenever it is above the line, it is bullish, like it did here. And also, whenever you see the blue line cross over the orange line, that's good if it crosses over it. If it crosses under it, where is it? Like it did here, then that's a bearish signal. Okay, it crossed back over here because the price went up. As soon as you see the cross, there's literally a change in price. Cross here too. The price was going up and down and under it. I wouldn't even trade that though. I don't like trading moments like this. I want a clear sign that the price is about to go up. But you can use the MACD because it's called moving average convergence divergence. If it, like, let's say the MACD is going up and this is going up, that's a good sign. Let's say the MACD is going down and this is going up, that's not a good sign. It's converging or it's diverging. Y'all will learn what all that means in the future. You really can trade price action alone. You don't need indicators. I'm just teaching you my strategy. And as far as how to read a chart, the basics is not all these indicators. The basics is making sure y'all understand where support and resistance at. Because just off that alone, when I first look at this chart, I noticed that this is the bottom. This is the bottom. I noticed that this is the lowest point on this chart. That's important to pay attention to. That's your level of support. I'll make it blue. I'll make it blue and I'll make the line super thick like I like my chick. Hold on. Not super thick, but yeah, you get it. So look, boom. The price bounced off this level like 1, 2, 3, 4, 5 times. This is a daily time. This is a daily time frame. It bounced off of it 5 times before it finally broke off that $55 level. All right. But this right here is proof. If y'all see some shit like this, that's a strong level of support. Do y'all hear me? If you see the price just really refusing to go under that level, it's a strong level of support. Price will 9 times out of 10 bounce back up off that level every time it touched that level. Easy money, y'all. I call it a textbook trade. Easy money. After it did it 4 times and came back down and touched that level, you would be a Pagliacci. My Uncle Abe used to call it a Pagliacci. He said, it's okay to be a fool. Just don't be no goddamn fool. You got to get in right here. Some people, you know, they try to snipe this shit and you get fucked because the price going to keep coming back down. You want to wait until it bounces off that level like it did. And you want to get in on this candlestick or this candlestick. And you can get out there. I know it don't seem like much, but that's enough. That's enough. You think it ain't. That's enough. But let's say you got the guts to stay in a trade for a long time. Let's see how long it would have been. This is when the market dipped back in April. By the time September the 3rd came around. So do you have what it takes to hold a contract from April to now? Because the long-term investors, that's who winning, man. The long-term investors are the ones who winning, y'all. The ones who bought the dip, right? Look at the top circle. Look at the top where it said, I know it's probably very hard to see, but you can also zoom in on the screen. Look at 2025, April. Now look at where we at now. The people bought the dip, they up. Not even just that, the long-term investors that bought this shit, every dip, they up 30 to 60% right now. And I say 30 to 60 because I don't know what dip they bought. I just know that they up right now because if you bought everything when it was low, you don't even have to sell it right now, but you could. I'm just throwing that out there too so y'all understand that you can take profit. You can sell some of the shares. You can get your initial investment out and then some and leave the rest. You can leave some horses in the race. But to not invest is crazy. It's barbaric. It's barbaric, y'all. When the market give you those dips, it's gonna dip again. When it dip, I don't want to tell you to put your house on it or nothing, but it is time to invest. It's time to be an aggressive investor. It's not, you don't want to bullshit with this, y'all. I'm telling you. You don't want to bullshit with it. So now, like I was saying about, I'm gonna take this off. I just wanted to show y'all real quick how being a long-term investor is where it's at. So the price bounced off this level. I can add another level. I'm paying attention to all the levels of support. That's another level of support right there because the price bounced off this level too. It's clear. Do y'all understand that much so far? The floor, how do you understand the concept of support being the floor? And I'll make it a dotted line too, so we can know that this is not the main area of support that I'm looking at. You get it, Chosen. I'm making sure you get your money's worth, Chosen. I want to make sure you are learning something. Okay. You actually locked in with me for the entire week, Chosen. Make sure you inbox me. You locked in. So any questions you have outside of tonight, I will answer them because you actually registered and I appreciate it. So now I got 2 levels of support drawn out. I'm going to make another level because there's obviously a strong level here. The price came all the way here and something stopped it from going down. It's a floor. Psychological floors. These are levels where people are buying and selling. And that's what's creating the change in price because buyers step in and push the price up. Sellers step in and push the price down. It is obvious a strong level. It bounced off this level here. It bounced off this level here. OK, now we want to mark resistance, the level that the price came up to and stopped at. Those are important levels, too. I'll make them yellow. All right. So now we got, and I'll take this gap off. I want y'all to pay attention to this gap because whenever you see a imbalance in price like this, whenever the price gaps up or gap down like that, usually what happens is the price will come back down into that gap. So you know when you see this, I know there go a fair value gap that could get filled in the future. I want to keep my eyes on this area because if price gets anywhere near it, I'm taking the price to go down into this zone. So that's $64, $63 maybe. Look, we're going to get some more numbers over here so I can actually see what it is. There we go. So $64. I can get the exact number the more I zoom in. $63.75, maybe even, yeah, I'll just go ahead and say 64 just to make it safe, just to be on the safe side. That's $1. That's $1. That ain't much. So really, I wouldn't even fuck with that. I would say I will wait for it to come down into that red and then I'll take it to go back up because I know that looking at resistance, I know that if the price comes back down to this level, this blue line, like it did here, it'll bounce off the blue line and go all the way back up to $73. It went up to $71 here from 67. From 67 to 71 is a good amount of money. From $67 to 73, because that's what it did here. It went from here all the way to here, and that is the pattern that we're looking at. We're looking at the pattern. You want to find the pattern, y'all. When we was the children, don't be the kid that was trying to put the triangle. Let me find out y'all was the kid that was trying to put the triangle block in the circle hole. Huh? You gotta find a pattern. If the teacher say, okay, kids, the first number is 3, the second number is 6, the third number is 9. What's the fourth number? If y'all say 10, get the fuck out of my class. I'm just playing, y'all. I'm just joking. Just joking. Yeah, the price gets down here. You want to spot the pattern. You want to become good at spotting the patterns by saying, and how do you spot the pattern? By going back and looking at previous levels of support and resistance. That's all. You go back and you find previous levels of support and resistance. We got the next levels now. We know where the price, hold on, I could even mark more. There's more levels because the price came up to here and then it came all the way down and it came up, but it didn't go up as high as it did before. It created a lower high. That's what that's called. That's called a lower high. A lower high. Because it went up high, but it didn't go as high as it did before. It created a lower high.
It created another lower high right here. So we got all these levels of resistance to pay attention to. That means the price will reach them on the way back up. The price will reach these levels on the way back up. These are calls. These are calls. I know where to put I know what strike price to pick. I don't need the whole 70. I don't need both 71s. I'll take this one off. I don't need the candle wicks. I'll use just the body of the candle. I don't need to mark it at the top of the wick, because you can use the wick or you can use the body. Do I need to go back over that? Let me go back over that, y'all, because I feel like I really wasn't supposed to skip the very beginning. I just automatically assume that y'all understand how to read a candlestick. But we're gonna assume that y'all don't, and we're gonna just keep it very simple. We're gonna keep it simple. Let's see, let me find a good example. Find a good example. Okay, I don't know what I'm doing wrong, because we're gonna do it like this. You know nothing. Okay, so when you're looking at candlesticks, you looking at a green candlestick, it means that the price went up. A red candlestick means that the price went down. Okay, do you got that much? I want y'all to understand the very minimum that you could understand. The basic, okay? Green means up, red means down. If you want to look at just a green candlestick, you should automatically know that this price went up from the bottom and it closed at the top. You should automatically know that the wicks, the skinny parts of the candlestick, is just telling you how low it went within that time or how high it went within that time. When you're dealing with a green candlestick and they got a bottom wick, it's letting you know that at that time, the price opened right here at this price of $100, but it went down to $98 first. Then it shot all the way up to $110, and then it came all the way back down to 105. So it opened at 100, it closed at 105, but it went all the way up to 110, and it went down as low as $98. You have the whole story of where the price went within that time frame. W's in the chat if y'all understand that much. Otherwise, I'm wasting my time and y'all not learning shit. I need to make sure y'all learning, and if not, I'll go back over it again. Okay, cool. Y'all got that much. Okay, cool. Now you looking at a red candlestick. You should know that the price went down, and you should be looking from the top to the bottom to see where it fell off the roof. It jumped off the roof. So you looking at it from the top down. Now you looking at the wicks. How high did it go during that time? How low did it go? It's the same on both candlesticks when it comes to the highs and the lows. It's going to be the high above the candlestick and the low below it. The only thing that changes is the opening and the close. The green candlesticks open from the bottom and close at the top. The red candlesticks open from the top and close from the bottom, because these are going up and these are going down. It's simple. Now, I had to make sure y'all get that, because what the fuck is, well, how can I name this how to read a stock chart, but I didn't go over the very minimum, because there's different ways to read a stock chart. I can look at this chart in a line graph. I can look at this chart in so look, an area graph, an area chart connects data points with lines and fills the area right below these lines to represent the accumulation of numerical values. We got the candlesticks. These show you 4 pieces of information. See, the line chart only shows you 1 piece of information. It just connects the lows or the closing. It connects the closing candlesticks to create this line chart. This candlestick is showing, these candlestick charts is showing me 4 pieces of information per candlestick. I get to know what the price opened and closed at, and the high and the low and the volume, really 5 pieces of information. I'm finding out how much people, how much it opened at, how much it closed at, what was the low, what was the high, and how many people was trading it. That's a lot of information for one candlestick. So that's a lot of information on one chart. Once you're just looking at the candlesticks without even taking into accountability the indicators, without even thinking about the indicators. Now, what we want is for the red line, is we want price to either, and I'll go down to a smaller time frame, like a 4-hour time frame, so we can get more candlesticks and get a better picture of exactly how close are we to this level of support. $66. When Coca-Cola dropped down to $66, right? To be exact, $66.80. But I'm also looking at the fact that it could let me see, it could gap down to here. Yeah, I got that level drawn on marked already. 65. So if it breaks, it's common sense. This is how y'all trade it. So y'all can learn. You set your areas of support and resistance. And when price reaches support or resistance, you're looking for price to break. I got my hand covering the mic, sorry. When price breaks above resistance or below support, you are looking for price to close below this line. And then you're going to automatically assume that it's going to the next line. If the price comes below this line and stays up here and goes back above it, that's not enough. We want to see it come below the line and stay below the line. We know that if it goes anywhere under, if it goes to $66.80, then we know it's going to $65. If it get to $65 and doesn't go below, if it don't go below this baby blue line, it'll go all the way back up to $70. It'll go all the way up to the yellow line. I'm telling you that. I know this to be true because I've done this shit a lot of times, okay? I know that when the price gets down here, if it doesn't break below this line, it will go back up. Do y'all understand? Do y'all get it? Do y'all understand what I'm telling you? You buy calls at support. You buy puts at resistance. You should not be buying a put right here unless it has already broke the previous level of support. Support is the floor. Resistance is the ceiling. I want to see the price break above, like it broke above these lines. It got to go all the way above it. And I want to see candlesticks fully close above the line. Like this candlestick closed above it. So let me give you an example. I got to be very specific. I don't want y'all to be confused. Look at this candlestick right here. Notice that this candlestick didn't close above it. This one didn't. This one didn't. This one touched it. This one broke above it. This one broke above it. This one closed above it. Do y'all understand that if it breaks above it, that's not enough? We needed to close above it. We needed to come back down and retest it. It needs to come back down and retest it, because if you just get in the trade here, you'll lose money here and you'll get stopped out the trade. You will get stopped out the trade here. It will hit your stop loss here. So you want to wait till this candle come and you want to get in here. You want to get in there. And it also went up to here and it came back down. But nonetheless, the price didn't do anything but continue up to the next level of resistance. When it got to resistance and did not close above it, did not break above it for real, just a little bit. When it got there and it didn't go above that line, or the second candle didn't go above that line either, I'm buying puts. I'm buying puts. And if you buy a put and if you make it last long enough, see, a 0 days to expire ass person wouldn't have made that much money. Because first of all, it took a day for it to go down from, let's see, it went from $73 to $72 in one day. But let's say you bought it to expire 3 months out. You got in right here, and 3 months later, all right, we got April, May, June, and July. By the time July came, you would have got down to $60. That's a good amount of money depending on how many contracts you bought. Okay, but if you give yourself even more time than that, all the way till now, you would have got that full $10 moves that you wanted within a 5 month span. Sometimes leaps is where it's at. A leap is when you buy a contract that expires in the future, like a year into the future. Swing trade is when you buy a position and you hold it overnight. You see what I'm saying? So if you hold a position overnight, that's a swing trade. If you buy a position to expire a year from now, that is called a leap. And so since I know Coca-Cola will go back up to $73 from this level by using the support, because obviously it bounced off this level before, that's how we know, y'all. That's how they know what the price is about to do, because of what it has done in the past. Do y'all understand? You simply go back and you look at what the price has done in the past. You want to use something called top-down analysis. So we're going to start out by looking at the 5-year chart. I want to look at the 5-year chart and get a good idea of where price has came from. Okay, boom. Now I can go down to a year-to-date chart. I don't need the 2 years. I don't need all that. I just need to see where it's been going since this year. We've been in an uptrend since $49 on Coca-Cola. All right, it came all the way up to there. It came all the way back down. And now it created higher highs and it's coming back down before it goes up again. The next level on Coca-Cola could be $80. The next level on Coca-Cola could be $80. I'm going off of the fact that it'll come down and then it'll go up higher than it was before. It'll come down, it'll go up higher than it was before. It'll come down, it'll go up higher than it was before. Do y'all see how I spotted the pattern? Or am I tripping? Y'all don't see the pattern? There's patterns. Whenever you can spot the pattern, that's when you really about to be making money in this month, because you can see stuff happen before it happened. See, I drew all these lines on here and it make it look complicated, but really, those are just cheat codes. I can take all that shit off. Those are just cheat codes. I'll take all the drawing off. I'll take all the indicators off. Look, let me get all the indicators off. Get the MACD off, the RSI. It ain't nothing but price action now. You can trade this alone. You don't even need all them extra indicators. But I'm going to have to dedicate an entire live to indicators by themselves. Just teaching indicators by themselves. But for y'all to know where to get in at and where to get out at, you need to know how to do technical analysis. You need to know how to come to a chart, look at it, read it, because all you're doing is paying attention to the numbers on the right and the dates on the bottom. It's called a XY axis. I dislike teaching math, but I have to teach y'all some type of math. Y'all got to understand and understand ratios, percentages, and charts. Charts, different types of charts, because it's not all about a line chart. They got different charts. This is called the Heikin-Ashi. The Heikin-Ashi calculates and plots the average values of opening and closing prices. This is literally just showing you the trend. If it's going up, it'll be green. If it's going down, it'll be red. Y'all might like Heikin-Ashi candlesticks more than you like regular candlesticks. You would never know that unless you did a little research on your own. It's only so much I can teach you because I like using regular candlesticks. I don't like using the Heikin-Ashi. I want to see when it goes down. I don't want you to turn this candlestick red. You feel me? I want to see that it went up from there. But if I was on the Heikin-Ashi, it turns that candlestick red and it just shows that it went down. I want to see it that it went up from there. I really need to see that information. It matters to me because now I'm paying attention to that level. I'm paying close attention to that level. Y'all see this? If you threw a bouncy ball up on top of a building and this is just the trajectory of it bouncing. The top is the ceiling, but right now it's the floor because at first it was the ceiling. And let me make sure I ain't showing no illegal shit in my camera. At first it was the ceiling, right? And then it broke above the ceiling and now it's the floor. Does that make sense? Support turned into resistance. Resistance turns into support. In this case, resistance, the ceiling, because right now it went up to the ceiling and broke above the ceiling and closed above the ceiling. And now the ceiling is acting as a floor. Do y'all see that? Support can become resistance and resistance can become support. All the price needs to do is break below it or close above it for it to flip. As soon as this flips below this line of what is support right now, because it's acting as a floor, it will be a ceiling because the price will have to come back up to it and break above it. Did that make sense, y'all? I can reword it for you. I can say it again. This is the floor. At first, it was the ceiling. This is support. At first, it was resistance. Resistance turned into support because the price broke above it and now it's trading on top of it. And resistance was acting like a ceiling, but now it's acting like a floor. Do y'all understand? Y'all get it? We got about 10 more minutes. I can go over I can use the remainder 10 minutes for questions. We made it through an hour. I could use the remaining 10 minutes. Do y'all have any questions? So during the week, if you join the live, I will show you how to actually open a trade. And then I'll show you how to manage a trade. So the next 2 sessions that we have together, I'm going to show you how to open the trade. And then once the trade is open, I'll show you how to manage it. Okay, so Chosen, I do day trades. I day trade futures and I do 0 DTE options sometimes. A 0 DTE option is where I can say, okay, Coca-Cola is $67. Tomorrow when Monday come, I can say Coca-Cola it will be $66 by the end of the day. And I can close that position before the end of the day. But if Coca-Cola go to $66 or less, you make a shit ton of money. All right, so I do zero DTEs. I do swing trades. A swing trade is where I would say, okay, I think Coca-Cola will go back to $70, and then I'll do it. I'll say it'll expire in December. So yeah, Breezy Life. Was it not? Did you Breezy Life? Did you? Did you? Because I do them free throughout the week, but not today. Not today. I wanted to be exclusive. I wanted serious people only. And you can tell who's serious and who's not by those who are not willing to pay for information that could potentially make them thousands of dollars. So if they have a problem spending $10 to learn something that could make them thousands of dollars, then I don't want to teach them. I don't want nothing to do with them. You feel me? We just separate the serious people from the people that are not serious. So what I just showed you was how to find better entries. Some of y'all are buying fucking calls right in the middle of this shit. Some of y'all buying puts right in the middle of this shit. Why? Because you don't know how to read a chart. You're not setting levels of support and resistance. You're not paying attention to when the price comes down to the previous level it came down to. You don't know chart patterns. You feel me? So this is important. That's why I taught the basics tonight. I don't see nothing wrong with charging to teach the basics. What do you see wrong with because I want to answer your question. Somebody asked the question, why wasn't this free? Can somebody in the comment section answer that question for Breezy Life? Explain to Breezy Life why this wasn't free. Save me the troubles, you guys. Breezy Life, did you pay to get in here? If you did and you feel like you ain't got your money's worth, talk to me. What's the question? I need to make sure everybody leave with the lesson, with a bare minimum, which is you need to at least be able to keep up with the price. You need to at least be able to stop trade. Some people trade the P&L. They see this shit go up or down, and then that's what they determine whether they're going to sell or buy. They don't have a clue where the price is going, where the price came from, where to get in a trade, where to get out of a trade. That information alone should change your trading literally right there tremendously. Yes, chosen. Yes, chosen. Precisely. Everybody that spent the measly ass $10, I will be able to see, and you're going to get more than just today's lesson. I got you for the whole week. I already knew this. I guess I was expecting something, gems I didn't know. Okay, Breezy. So what is it that you want? So I have to make sure, check this out, Breezy. You need to hit me up throughout the week because literally the topic, I even said it on the flyer that this is a ground zero beginner's course. Ground zero means they know absolutely nothing. You feel me? That's the one thing I didn't want was for people who already knew this stuff to join. That's why I made sure I called it Ground Zero Beginner's Course, Beginner's Crash Course. You feel me? But Breezy, because you paid to join, I got you. Don't worry, I got you. But if I start talking about all this shit now, it's irrelevant to a lot of the people that joined. Yes, it is good info, but it's the bare minimum. It's the shit that you already knew. And I didn't want people who already knew to pay for this. I wanted you guys to... Matter of fact, we already link up outside of this, but that $10 going to take you a long way with me, Breezy. Don't worry. I got you. Don't worry. If you paid to join the live stream, I got you. And for the rest of y'all, do y'all have any questions? I got 5 minutes left here. Do y'all got any questions? We went over support. We went over resistance. We went over a screener. We went over entries and exits because I want you all to also pay attention. You know where to enter the trade based off of whether it's at support or resistance. You know where if the price is here and it bounced off this level before, common sense will tell you what to do here. And if I do get in here, I'm gonna set a stop loss that's not far from it so that I can get out the trade. So I can get out the trade profitable. Ain't nothing better than a stop loss. I bet. Let me see if do you use your stop losses like this, Breezy? Let's see. Let me delete all the drawings off so I can show y'all exactly the method that I use to lock in profits. All right, let's use this for an example right here. Let's say we got in a trade. Boom. because we noticed that the price went up and down, up and down. We got in the trade when it hit support right here. I'm gonna make it blue. I'll make it green to symbol where we get in at. Boom. All right. So now I'm gonna set a stop loss, right? If I get in the trade right there and I bought a call and I think the price is going up, I will set a stop loss at the previous level of support, which is a pretty deep ass stop loss, but $2, right? If the price drops $2, get me out the trade. So what happens is I'm going to take another blue line and to show you where the price, we're going to follow the price. So now we got in the trade here. We got our stop loss set here. If the price goes, soon as the price went up to this level, I took my stop loss and you manually change your stop loss and you want to move your stop loss up. So now if it comes back down, it takes you out the trade profitable. You get to walk away with that money. If you are trading without doing this, if you trading without changing that stop loss, if you trading without using the stop loss, you feel me? You fucking up. If you like immediately, I already told y'all if the price went down $2, I was going to get out. But because it went up $2, I moved my stop loss to where now the price can keep going. And the more the price keep going, since it didn't hit my stop loss, I'm going to keep moving it up to lock in those profits. I'm locking in profits all the way up here. The price came all the way up. And when it came down, it got me out the trade instead of me leaving my stop loss all the way down here, right? Now, let's say you got your stop loss down here. You get in the trade here. It go all the way up. You see your shit say up 1,000 and you don't close it because you think it's going to give you 2,000 being greedy. And then it come all the way down and fucking hit your stop loss. So Breezy, if you already know all this shit, your problem might be discipline. Your problem might be psychology because there ain't nothing else you need to know, Breezy. You probably got analysis paralysis and everything because you know all this shit already. And you really didn't need the course. But if there's other shit that you need, I promise you I got you. Just inbox me because I think it's psychology. I bet it's discipline. I bet you know everything you need to do. Do you follow your rules when you trading? You might already be profitable. So why would a profitable trader who knows everything still be buying courses and beginner courses? Because you feel me? You don't need it. You don't need it. You don't need it. The fact that you even said trailing your stop loss lets me know that you sandbagging. I say everybody sandbagging. No, for real, you already know. But yes, trail your stop loss. Do you do it? I wouldn't be here today talking about this shit if it wasn't for that trailing stop loss, y'all. If it wasn't for that stop loss and using it to the best, you ain't no walking away with profit without changing your stop loss from one number to a higher number if the price is going in your direction. Don't do it if you want to and watch what happens. All right. But that's not advice. I just told you everything I think you should do. You need to make sure you use your stop loss. Make sure that you already decided before you enter the trade how much you're willing to lose. And make sure that you are buying at support and selling at resistance. And the only way you're going to buy at resistance is if you buying covered calls or if it breaks above resistance and it's on its way back up. That's the only time. The information in the live stream alone, I just told all my beginner friends, right? My new friends, I just told y'all really the simple shit. And the gaps happen because some type of news made the price go up like that. Some type of news made the price go up like that. And sometimes it's not news. It's just, buyer sentiment. We didn't push the price up. But whenever you see a gap like that happen, Constance, you just know that it could get filled. Just know that the price could come all the way back down into this area that it's an imbalance there. And Chosen, I like to tell people that you can literally, like, there are stocks that cost $2. So don't get it twisted. You can, oh, my phone finna die. You could buy a $2 stock, but you ain't gonna make no money. The stock if that $2 stock go to $4, you only made $2 profit. So that number that you're asking me about is really, you determine that number. But just know it's only so much you can do with a little bit. That's why I do tell people a good number to start with is 5K. Because you can take You can take a good percentage of that and buy stocks outright without trading them, just buying stocks outright. And then you can day trade the rest of it or swing trade the rest of it and leave a good percentage of it as buying power for opportunities that pop up like the ones we got in April. See, if you was in calls and all your shit was wrapped up in positions during April, you wouldn't have been able to make a lot of money. I like your lives that I see. I purchased the course for support to show you and see if there's anything. Breezy, I appreciate it. Listen, I don't think you ever purchased anything from me, but I charge like $900 for the membership, for mentorship. I got y'all. If you paid $10, you just got $890 off because I'm gonna help you as if you really gave me $900. This is for beginners. That's all. I promise you. Like you can join the lives on a daily basis, the ones that I do every day, and you gonna get it. Like I already told them, open is finna go. Open is not done. GoPro is not done. Fubo is not done. Okay, let me see. Let me show you Goodyear. I'm not sure if you was in my live when I talked about it. Goodyear gap down. It'll fill this gap. It'll come up and fill this gap. We looking at least a $2 move on Goodyear, but I do think that they'll continue to go all the way back up from here because this is a level that they bounced off of before. I want to give all the stocks that I got on my watch list, and I did tell y'all about on ONDS. I think it's a little bit too late on this one, but it's still $6.50, $6.72. It was $6.50 Friday when we was talking about it. Earlier on in the week, we was talking about this when it was at $4. So them type of moves can make you a shit ton of money. Add it to your watch list. If you join the live throughout the week, you gonna get those live streams that you looking for. But because you joined, you guys can inbox me anytime. You can inbox me anytime. All I want y'all to do is say the code. The code gonna be 1991. That's how I know that you was in the live. Just say 1991, and I'll explain anything to you throughout the week. You got a week of Q&A from me. Can you explain when you buy multiple contracts? Yes. So when you buy one contract is worth 100 shares, Chosen. One contract is worth 100 shares. So instead of me buying 100 shares of this, right, which would be $600, I can go ahead, or $650. I can go ahead and get one contract and make money off of this as if I own 100 shares. 2 contracts, 200 shares. 3 contracts, 300 shares. The more contracts you make, the more money you make. The more contracts you make, the more you can stay in the trade. See, if I got in the trade here with one contract and it went all the way up to here, I would sell that one contract right here. If I bought 3 contracts and it went all the way up to here, I could sell 2 of them and leave one. Leave one for just in case it go up higher. Did that answer the question, Chosen? Why you want to get more than one? It's also the bigger the risk, the bigger the reward. Now, even if I got 10 contracts and it costs more, you still can set your stop loss. You can set your stop loss and say, if I lose $1, get me the fuck out the trade. You get to choose how much money you lose, y'all. Hey, who that was? Breezy Life. Even if you are a professional trader, that's still information that you can take and add to your bag. Most of the time, a lot of us already know everything that we need to know. It's a psychological thing. I promise you, none of this shit I taught y'all about technical analysis will make you rich. What'll make you rich is paying attention to how you think before you enter a trade. That's the secret. I promise you. That's the big secret that the professional traders not telling nobody, because they ass lose money too, but they not trading with emotions. They also using the proper risk to reward ratio, so they don't give a fuck about a loss. So they really cutting their shit short at 1 to 3%. So they really don't care about a loss. It's their mindset. They don't care that they got stopped out of trade. See, amateurs is worried about how much money they can make. The professionals is worried about controlling how much they lose. You gonna make money in the market, y'all. Oh, I can't stress that enough. It'll sound like I'm really trying to sell some shit to you if I go to telling you how much money you can make in this shit. Y'all should already know. I don't got to tell y'all shit. The problem is y'all know how much money you can lose, but don't know how not to do it. And the easiest way is that stop loss. It's self-explanatory. Without that, you're going to lose money, and you get to choose how much you lose when you use it. Consistency for the dub. Do y'all got any questions? And join the live tomorrow. I will not charge y'all for another live. All right, I will not charge y'all for another live. I just wanted to test it out. And it said beginners. I like to charge the beginners, the rookies, because they don't like to. They be asking me, can I start with $20? Can I invest with $20? You hit the link in the bio, light. You hit the link in the bio, and I go live every night, y'all, after 11 o'clock. I'll try to do more in the daytime pre-market, and I'm looking to do 3 a days. One before the market opens, one after the market closes, and then I do a late night live every day for sure after 11 o'clock at night. So this was just the basic. I'm surprised only like 9 to 10 people joined it anyways. So yeah, with that being said, I'm gonna let y'all go. I'm not gonna hold y'all. I don't want more people to join the live and then they pay and then the show is over. So remember, y'all, if you put since 2020 chosen, I want to say I really want to say 2 to 3 years, because I've been taking it serious since about 2023, like around that time. But 2020, I took my first trades back then. I've been learning ever since. I did a lot of paper trading before I ever fucked with any of this. I learned how to use the platforms through paper trading, which I highly recommend y'all do. You can lose the fake money. You don't got to lose your real money. You can get better at trading by paper trading. Fuck what you heard. Fuck what you heard. I know they say it's not real money. So the problem is they don't have a good imagination. The problem is also they get on there and they trade with $1 million instead of putting how much they gonna put in their real account. So if you can't trade with 2,000 on a paper account, what make you think you can do it in a real one? Y'all feel me? Download Webull and paper trade for a minute. Get used to the shit. And for my seasoned traders, join the live tomorrow. Also, Mondays is sell-offs. I hope y'all know that already. I ain't got to tell you. It's a bunch of shit y'all already know. That's why I don't really too much try to teach y'all nothing. It's just solely what I'm buying and selling. Because we made so much fucking money off Open last week, y'all. It's been a great weekend. It's going to be a great rest of the year. Open took care of us for the rest of the year. So we also pay attention to other stocks that could do the same thing. We pay attention to everything. We don't want to miss out on nothing. But you don't want to have FOMO. You don't want to have fear of missing out. That'll make you make dumb decisions too, like buying in at the top of something because you think you about to miss out. You don't want that fucking FOMO. You want to be patient, be smart, pay attention to previous levels, and then you'll be like, damn, if I had to just waited, I could have got it for that much cheaper. Make sense? Does it make sense? All right, we've been on here for about an hour. I need any questions. Y'all got any questions? I'm trying to answer the questions to the best. Not trying, I'm going to answer them. Because whatever we don't know, we're going to figure it out. Any questions? Remember, y'all, 1991. That's all y'all got to do is say that to me with the question that you have. And I'll remember that you was in this live stream. It's like a voucher. All right, with that being said, I'm going to cut out before we get more people in here. I don't see any questions. All right, y'all. Thank you.